What's up, investors? Welcome to another episode of Understanding DGOC. This is part 4 called Management Analysis. So today we are going to take a look at management. Here you see an overview of their management executive team. First one and foremost actually is Rusty Hudson Jr. He is the co-founder and CEO. He has a degree in accounting. Has 13 plus years experience in finance and 20 plus years in oil and gas. His experience in finance is basically what I believe is the success of this company, because he uses his experience in finance to basically build a business model that is very good financially and, in other words, very good for shareholders. What was most surprising to me about researching the management team is that basically all of them, as you can see, all of them, the COO, the Chief Operating Officer, that is, the CFO, Chief Financial Officer, CIO, Chief Information Officer, and the CCO, which is the Chief Commercial Officer, they all have a degree in accounting or something of that sort. So all of them look at it from a financial perspective, and you can see that at the experience as well. To me, this is very important because I don't want to have like a management team that is basically only focused on growth and doesn't care about what something costs, and they just want to get market share and grow. Basically like Netflix. I love Netflix, but it's been growing for like 10 years and there is no future in sight when it's actually going to return value to shareholders. So they all have financial experience or a financial degree, which is basically what makes them a very appealing management team. Here you see the board of directors. Two of the names were also in the executive team, that is Rusty Hudson Jr. and Brad Gray. They both hold a substantial amount of shares as well. And the other people are basically the board members. You can find more information if you want on the website. Like everything that I just found is basically all available on their website. So if you want to dive deeper into what they do or what they have done in their past, you can check that out. But here you can just see the management, both management teams basically. And why I sorted this out is because I want to have a look at how much shares they own to see how their personal relation basically with the company is. How dependent are they on the success of the company? So that is why I had to figure out who is in the executive team and who is in the board of directors. I think this part is going to be the most interesting part. This is the share purchases in March 2020, so this month. And here we see all the insiders that have purchased shares of DGOC. So here you can see that Brad Gray bought 15,000 shares at an average price of 66.80 pence. At the start of my video, I believe the DGOC was trading at 60 pence. So you're going to get it cheaper than one of the board members and one of the executive members. Keep in mind that they already had shares, so their average buying price is way higher. Eric Williams, which is the CFO, very experienced guy as well. He has a presentation on YouTube as well for DGOC. It's like a half-hour presentation. It's a very nice one. You learn a lot from it. So if you are bored, you can check that out. He bought it for the same average price, and he now has over 100,000 shares. I believe that he has a contract which would offer him the opportunity to get like 400,000 shares in the upcoming 5 years, like if his goals are being reached, and I'm pretty sure they're very tough but financially attractive goals. He would get more shares of the company, because right now he doesn't have a lot of shares, but he has only been with the company for like 3 years now, I believe. And here at the bottom you see James Rode bought 50,000 shares at a little bit higher price, but still a very cheap price. Here you have more purchases. Here you see David Johnson, chairman, bought 25,000 shares for 66.2 pence. And here you see Martin Thomas, also in the board, bought 35,000 shares at a price of 67. And to the right you see the CEO, Rusty Hutson, with a massive purchase price of 350,000 ordinary shares for an average price of, let's say, 68 pence, which is basically more expensive than all the other guys. But the following part might be even more interesting. Following this purchase, Rusty Hutson Jr. is now interested in 20,860,000 ordinary shares, representing approximately 3.25% of the company's issued share capital. So he has a big stake in the company. This means, as we've just received dividends, well, you've received about 3%. So this guy gets his year's salary, which is about 600,000 a year, and he gets that in dividends, basically. So he is very dependent on the company, and he has a lot of faith because he keeps on buying. And these are just the purchases in March. He has been buying in December, I believe, as well, and the price was 90 pence then. So you're still going to get it cheaper than when he was buying it with his own money. So the prices are still very attractive right now because I believe it's trading around 80, 82 pence. So it's a bit more expensive than the prices you see here. But they have been buying back all of these actually. I believe they have been purchasing for the past 9 months, and they have been buying at prices of 100, 110 pence, 120 pence even. So they all think that it is attractively priced, and they just keep on buying. So if the insiders know that it is attractively priced, you may want to take it into consideration to buy actually yourself some DGOC shares. So finally, I'm just gonna summarize the ownership of the insiders. They have 1, 2, 3, 4, 5, 6, 7, 8 insiders who own shares. That is massive. Like, I haven't seen that before, but I've not been in the game for that long, like only a few years. But usually what I see is when people get rewarded with shares, most of them are not financially equipped, I guess, so they don't really like investing and whatnot, so they would sell their shares instantly. But these guys, all 8 of them, they keep their shares, and not only do they keep them, they keep buying shares, so they know that this business is going to go forward. And none of these guys know less than us because they are inside. They talk with the CEO, they are the CEO, they are in the board, they have every information they need to make sure this is a solid investment, and they know it. So there is literally, well, I wouldn't say literally nobody in the company, but there's barely anyone in management team that, based on what they actually do and not just what they say, that thinks that this company is not going to be successful. So they all put their money where their mouth is. So they think it's going to grow, they support it, they're in the management teams, and because of that, they're buying shares. And because that is publicly available, we know it, and now we know that, hey, this is probably something that we want to own. Thank you for listening today. In 2 days I'll be uploading the last video, which is going to be the outlook and the thesis. It's going to be a tough one, it's going to be an interesting one. It's going to be mostly talking about the way I did my new valuation. I'm going to show you both, like the one in the summary in the first video, and I'm going to show you the new one, which is basically assuming that they can get new fields with debt and how that is going to grow the company. And I'm going to look at a 10-year perspective with that growth rate that I calculated, and I'm going to come up with a result that is probably going to blow your mind. So stay tuned.